very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuloko, and with me on today's episode is Christina Pius.
Hello, viewers.
It's been said severally that taxation contains mainly of three components: tax policy, tax legislation, that is the laws guiding the different tax types, and of course, tax administration. And that presupposes that there are several stakeholders involved in the process. Talk about the tax collector, the taxpayer, the tax advisor, and the arbitrator. In other words, the judiciary. In the case of Nigerian taxation, the Tax Appeal Tribunal is a major player in tax arbitration. You either fit into one or a combination of these segments. After all, like tax collectors are quick to point out, they are also taxpayers. Yes, everyone who earns income is a taxpayer. The other day in Port-Harcourt, two offices of the Federal Inland Revenue Service, that of Rumuokwurushi and that of Port-Harcourt Main, they call them micro and small taxpayer offices, jointly hosted an interactive session with a focus on withholding tax administration. One of the papers presented by one of the tax controllers was on the rights and duties of the taxpayer. That is our theme today on Tax Matters.
This interactive session, like the one organized by FIRS in the past, is committed to setting standards for effective service delivery to our taxpayers. It will also bring to the fore our policy, which holds that taxpayer is king.
Yes, indeed, the taxpayer is king, and that effectively set the tone for Mr. H.M. Ibrahim's paper on the rights and obligations of the taxpayer.
What are the rights of a taxpayer? It is the taxpayer's right to be given a taxpayer identification number free of charge. So be issued tax clearance certificate and be sure of the identity of any person claiming to be an official of FIRS. So anybody should not just meet you to tell you that, look, I'm an official of FIRS, let me have your money so that I issue you whatever you want of FIRS. You have that right to inquire, even ask the tax controller, can I see your ID card? It's one, we have it here. So what are the taxpayer's obligation to FIRS? One, to be truthful in your dealings with FIRS and make enquiries when in doubt. Keep records in accordance with the law. Take reasonable care in preparing your tax returns and other documents in accordance with the law. Lodge tax returns and other required documents or information on or before due date. Avoid negative influence or inducement of tax officials. Declare and pay your taxes in full and or penalties on or before due date.
What does the taxpayer do when he or she is aggrieved?
Taxpayers are free to make complaints, enquiries through the use of our Servicom register, phone calls, letters, SMS, use of suggestion box, verbally too. Then taxpayers' complaints should be accompanied with the following details: full names, contact telephone numbers, email addresses, name of service window at which taxpayer is aggrieved, or where and the time, nature of grievances. Then FIRS through Servicom unit will process the complaints and provide timely and professional feedback.
Mr. Cuthbert Nwawu, tax controller of the Port-Harcourt Micro and Small Tax Office, delivered a paper on withholding tax administration, challenges and prospects.
Some of these challenges, I try to itemize them: wrong classification and wrong application of withholding tax rate. Some agents, maybe with connivance of their contractors, may decide to classify wrongly services or payments that should attract 10%. They classify it in such a way that they will deduct 5%. For example, management fee. They may decide that to say that contracts for management. So they will now they will be looking at the word contract, because they've seen in the rate that all types of contracts. So that is one way that they try to create problem or misapply the provisions of the law. The other one is problem of interpretation of all types of contracts and agency arrangement other than sales in the ordinary course of business. The other aspect of problem is payment of tax into a wrong account. Now, some of these problems come up where an agent, a withholding tax agent, has dual responsibility. One is deducting VAT, and the other one is deducting withholding tax. Sometimes we find a situation whereby the VAT is paid into the federation account, or the withholding tax is paid into the VAT account. So we usually advise that both taxpayers and their agents should be very careful, because when you make payment to the bank, you are given an electronic ticket, and that electronic ticket shows where the account is going to. If you have paid VAT and what is described there is CIT, or you have paid penalty and what is said there is VAT, you know that if you dictate it there and then, the teller can call back that posting and effect deduction, because after 12 midnight, all payments at that bank in respect of tax will automatically be swept away from that bank into the lead bank. So you will not have opportunity to effect any change. In fact, there was one pathetic case where there's transposition in the TIN, in the tax identification number, and when there was this transposition, say 791 was written as 971, that automatically went to another taxpayer. In fact, that thing happened in my office. The taxpayer paid, and that thing went to a taxpayer in Warri. By the following day, the receipt was generated in the name of the other company. So they came to me and said, I should help them to solve the problem. I said, how do you want me to solve the problem? To bring the other company and ask the company to give you a refund? And because that money is not resident with the collecting bank, it has already gone out of that collecting bank. And the company in Warri is not maintaining an account in the collecting bank. That was a very big problem. And that is why this forum is an opportunity, is a place for us to tell you, when you pay, don't just walk out from the bank and start going and assume that all is. Look at the e-ticket. Compare it with the description on the teller. The other one is failure to submit withholding tax schedule. You know, that is a problem. When you give us the withholding tax schedule, we'll be able to know that what the nature of service that is properly classified and the proper rate is given. And we know who is to benefit. The team is there, and so on and so forth. The situations where some people will, or the bank marketers will come, they collect the check from you. I say after will come for schedule. I tell you that the way the pay direct system is configured, the schedule has to be uploaded first before it will prompt for the payment instrument.
Thereafter followed a robust interactive session, which of course was the original intention.
My question is this. According to the tax law, it says that when there's an evidence that a taxpayer had suffered deduction of tax liability, that the taxpayer should not on any case not giving his or her tax clearance. But most times it's not like that. The withholding has been deducted at source. And I know that FIRS has a way of getting information of deductions at source, in as much as it has been remitted by the agent or the collector, as the case may be. But in some cases, you come out, you bring this information that this deduction has been done at source. You will still be expected to bring the withholding credit note.
If you've suffered tax already at source, and you've given me evidencing proof to show for the deductions done, the amount remitted by the agent that deducted. Why do I waste my time in giving you that credit? Where I have trouble with you is if you've not been able to give me the evidencing proof of the deduction done and the remittance made. Once I see it that they've switched the money to the FIRS account, I'll use the documents you give me to give you the credit and make my notes.
Yeah, okay. Yeah, waiting be this.
The deduction now for withholding tax.
Withholding guinea. Look, if you not pay me my correct money today, hey, Munu get me for.
But madam, should be your company paying income tax.
Yes, that one I enough load for me to carry. Why in I won't come add join them again?
You see, withholding tax now advance payment for income tax. So when you do some kind job like contract, we go remove small from them when we won't pay you.
I don't go contract am up. No. I bet tell me another.
No. We must pay the money to FIRS within 30 days, and they will give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So
now to help make the money where you go pay at the end of the year small.
So this withholding tax something, it be like part payment of where no.
Exactly, madam.
I beg you, give me my check.
Remember, come collect your credit note.
Withholding tax now for we own good. FIRS, it pays to pay your tax.
Welcome back. The program is Tax Matters, and we are looking at the roles of stakeholders in the tax system. You will agree with us that taxation has now become a full profession as well as a course of study in its own right at the highest level, thanks to the efforts of the Federal Revenue Service and the Chartered Institute of Taxation of Nigeria. On Thursday, the 20th of September 2012, the CITM broke new grounds. It presented to stakeholders an exposure draft of Statement of Taxation Standards in Nigeria. Correspondent Christina Pius was at the event and reports.
The event took place on Thursday, September 20th in Ikeja, Lagos. Mr. G.F. Fashuto, past president of the CITN, is the chairman of the Nigerian Taxation Standard Board of the CITN.
When we talk about the Statement of Taxation Standard, it appears to be a novel idea because most of us are not used to that concept in the professionalism in this country. Some of us who are also members of other professions, especially the accountancy profession, we are aware of the Statement of Accounting Standard. And in the Statement of Accounting Standard, you have only two standards talking about taxation as far as accounting is concerned. And that is Accounting Standard on Deferred Taxation, as well as Accounting Standard on Taxation as represented in the financial statement. But when we are talking about the Statement of Taxation Standard, we are talking about the global overview of taxation generally. The Nigerian Taxation Standard Board consider it necessary that we need to have your input, not only based on what we have posted on the website of the Institute, but also to see you physically, to express your mind, to tell us your mind about this standard, so that we can incorporate all these views before it now becomes binding on every member of the Institute.
Immediately thereafter, the Statement of Taxation Standard were presented.
I'll be taking the first standard, which is standard on know your client. Then, of course, I will also look at tax return position. And I'm also taking the procedural aspect of return filing. I'll go straight to STS 1, which is know your client. Know your client. Now, I started by looking at who is your client as a tax consultant, a tax professional. Who is your client? And I said that a taxpayer on whose behalf a member is acting or you intend to act is your client. It is not only when you have signed the engagement and all of that has been dotted and you have the package. As soon as you start relationship, as soon as you plan to even send proposal, you must recognize that this is a potential client, and you begin to recognize the person more or less as what? As your client. Those clients can be both local and international clients. Nigeria recently signed double tax agreement with Mauritius. We've been receiving inquiries on tax incentives, what are the possibilities in Nigeria, and all of that. We need to know our clients so that we know exactly who we are signing engagement with. Some of us sign with, it is possible for you to go into an engagement maybe with the account officer, and when your fee comes, it goes straight to the MD because there is need for approval, and the MD says, see, I don't know this guy, when was he engaged? And you bring out the engagement letter. The guy does not have authority to sign any engagement. And you begin to wonder whether you have done a bonus job or not. To carry out identity check on your clients is pretty straightforward nowadays. Just go to the net, you can pay personal visits, and of course, third-party confirmation, including the tax authorities. I know that several assignments that I have taken on, if it's a client that I'm not too sure about, I go to the tax office to find out what type of client is this. Is it somebody that will expect me to, reduce tax liability by all means, or somebody that is, compliant? Some companies see tax consultant as tax evading agents, and I tell them that my work is not to reduce your tax, it's to ensure you pay the correct tax. Tax consultant work is not tax evasion work. As much as possible, we want to avoid tax, but when it becomes even aggressive in some jurisdictions, they take it as evasion. That is, know your client.
We are going to discuss this afternoon STS 4 to 7. STS 4 is previously agreed tax return filing. 5. Form and content of tax advice/opinion. 6. Knowledge of error, administrative proceedings. And 7. Knowledge of error, returns preparation. 6 and 7 are related. As you go on, you will see the difference, but they're actually very, very related. Where there's administrative proceedings, what's administrative proceedings? Administrative proceedings is when the tax authority is examining your books or your returns. If there's any matter that is being adjudicated upon by the tax authority that this item should be treated in such manner, ordinarily we should follow that treatment. In the same vein, if a matter has been taken to the court and court has given its decision that this item should be treated in this manner, members should follow that treatment strictly. But this standard is saying you can depart from that treatment. You can say, well, the court has given a ruling that this item should be treated in this form. And the tax authority too, through the examination of your books or through tax audit, has given a decision that this matter or this item should be treated in this manner. This standard says, well, you can choose to depart from it. But there are provisions for you to depart from that treatment. 1, for you to depart from that treatment being given by the court or administrative tax proceeding, you would have had enough evidence that before this judgment was given by the court, if I had gone for appeal, I would have won. That's one. And secondly, maybe you hadn't enough information as at the time of judgment or at the time of administrative proceedings, you hadn't enough information. But this time around, you have the document to back up your claim. You can depart from that treatment and give it another treatment in your subsequent returns. Going to Taxation Standard 5, Form and content of tax advice and opinion. Well, for us to give tax advice and opinion on any tax issue, what is the form of advice to be given? Is it going to be oral? Is it going to be documented? Is it going to be both? For you to take a decision on the form of advice to be given, you have to look at the nature of the transaction, the nature of your client, the time required, the complexity of the transaction, and if you need to seek another opinion. If it's a routine question being asked, well, you can give a verbal advice. However, if the question is technical, complex, it has to be documented. Taxation Standard 7, knowledge of error, returns preparation. We'll be talking about returns. Tax is all about returns. Like I told you, STS 6 and 7 are very related. Why 6 is telling us about your knowledge of error in an administrative proceeding. 7 is telling us your knowledge of error in a return previously filed.
Mr. J.A. Arogundade, former director at the FIRS and one of the leading lights of the CITN, presented the Statement of Taxation Standard on estimates.
We have 3 ways in which we can use estimate in the preparation of returns to be filed to the tax authorities. The need for use of estimate can arise where, in the first instance, the data you have may be based on small items. We also have another instance as to where the information you have is based on missing records. There could be fire outbreak and all the data you have, they are already destroyed, and you have to file returns to the tax authorities, in which case you have to resort to the use of estimate. Then we have a third instance. This is where there is a statutory requirement that you have to base the returns you are filing on estimate. And in this case, we have the requirement under the PPT Act.
The statements of accounting standards 1 to 7, as well as that on estimates, were thoroughly digested, and with the benefit of clarifications from the presenters, as well as the contributions of stakeholders in attendance, Nigeria is indeed set for a world-class statement of taxation standards.
Majority of our members have assumed the role of the taxpayers. We even prepare their taxes for them, thinking of the figures for them, figures to be included in their accounts, and so on and so forth. And that is the problem when we are going to have tax audit, either by the state tax authority or by a federal inland revenue. Our members may find themselves to be in trouble. That is why, right from Statement of Taxation Standard 1, we have been talking about returns, and returns. And what has been common to all the standards we have talked about this morning is that the responsibility for the provision of the data to be used is exclusively that of the taxpayer. Where taxpayer asks you to suggest, to make recommendation, and so on and so forth, you should know that if it is the account preparation, as at that time you are not acting as a tax professional, you are acting as accountant. If it is whether the account agrees with CAMA or any other legal document, as at that time you are acting as an auditor, not as a tax practitioner. All these standards are talking about when you are acting as a tax practitioner. We are very encouraged, members of the board, we are very, very encouraged with what we have had this morning with the participation. And it shows that the future of taxation profession in this country looks bright, very, very bright.
Yes, so it's a new dawn for the Nigerian tax system. CITN, kudos, keep the flag flying. Viewers, it's on that bright note that we'll come to the end of today's episode of Tax Matters. Remember that you can watch this episode again, and indeed any past episode of Tax Matters, by watching us on YouTube. The link is on your screen. You can also follow us on Facebook and on Twitter. Of course, your emails are welcome, just as you can call us on telephone. From Christina.
Thank you for watching.
And from me, have a good week ahead.